Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Thank you so much for checking out my show, where we have philosophical conversations about the economic, cultural, and psychological implications of Bitcoin. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, smash that like button so that more people see it, and put those notifications on so you don't miss out on any fresh and dope content. This episode with Bob Burnett about the miner's trilemma, the crucial role of wild horses in Bitcoin mining, and Satoshi's heel is brought to you by River. Buy and mine Bitcoin with zero fees on recurring orders when you dollar cost average at river.com. Truly, the best way to build your Bitcoin wealth. River doesn't use or lend your Bitcoin. All Bitcoin at River is held in secure cold storage with 100% full reserves. You can withdraw your Bitcoin at any time. River has a level of service that is unheard of in this industry. Sure, you've bought Bitcoin before, but have you tried River? See and feel the difference for yourself at river.com. Unlock the possibilities of this revolutionary digital asset with River. To get started and find out for yourself, use the link in the show notes and get $20 free when you buy Bitcoin at river.com or on the River app. There's no better time to get your Bitcoin off an exchange than now. My favorite hardware wallet is the Cold Card from CoinKite, and it's definitely worth learning how to use it. Sleep at night technology, the only dedicated air-gapped, ultra-secure, open hardware wallet for Bitcoin. CoinKite is a leader in security and hardware manufacturer, established block 141,000. Use the link in the show notes for 5% off your order now. Join us in Miami Beach this May 18th to 20th for the world's biggest Bitcoin conference. Grab your ticket before they run out. The content is going to be sick, and the parties already look off the hook. To get 10% off your ticket and help support me and the show, use the code MATRIX at b.tc/conference. And now, let's enter the Bitcoin Matrix with Bob Burnett, where we discuss whether Bitcoin mining infrastructure is a vulnerability that could take down Bitcoin.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Bob Burnett is a technologist and entrepreneur with over 35 years of experience in technology-related companies. He is an educator, speaker, and evangelist for Bitcoin and its importance to the world's future. He is the founder and CEO of 3 companies in the Bitcoin mining space: Barefoot Mining, BitFlow, and Divi Systems. Early in his career, Bob was an engineer who served on the development team for the world's first laptop computer and the world's first sub-notebook computer. He also spent 11 years at Gateway Inc. in a variety of management positions, including Chief Technology Officer, Executive Vice President of Products, and Executive Vice President of International Markets. Bob Burnett, welcome to the Bitcoin Matrix podcast. How are you?
I'm awesome, Cedric. I'm happy to be here.
Yeah, I'm super excited to chat. I got to see you down at Bitcoin Day Naples on a panel with Lawrence Lepard, Gary Leland, and Greg Foss. And I also saw you on another panel focused primarily on mining. And that was, I think that one came first. And I was blown away by that panel. I think you were joined by Joe Dillon and it's
Matty Ice. Yeah,
Matty Ice. And the chief revenue officer, I think, for Blockware.
From Blockware.
Yep. For Blockware. And that was a fascinating conversation. I think I've invited all of you on the show, but you're the first one I'm kicking it off with. And that was super interesting about mining. Your work and your articles are fascinating. So we're going to get into that. But kind of getting to know you through those panels, your background is also really interesting and unique. So I'd love to maybe start there.
Sure.
I mean, we noted in the intro sort of Gateway and the first laptop computer. Maybe we can kind of just, how'd you end up in that space?
Yeah, it's a great story, I think. Certainly from my perspective, very fortuitous. For those of you who are not watching and listening, I'm an old guy. So, and it actually based on the intro, the fact that I was on the design team of the first laptop probably tells you I'm pretty old too. But
Not that old, but I hear you.
But I try to be young at heart. I think Bitcoin helps keep me young at heart. It keeps me motivated and active, and I'm so blessed that it's here. So I got involved in technology around 1978, 1979. And that was pre-IBM PC days. So at that time, there were computers from companies like Commodore and Tandy, which was a division of Radio Shack. They each computer was had its own operating system. There was no DOS, there was no Windows, and so you would kind of go through a lot to pick what computer you were going to buy. And there was no software either, by the way. So you bought a computer and you wrote all the software yourself, right? So if you, if you wanted to have a recipe list, which people would do things kind of like that, you wrote a program to keep recipe lists. If you wanted to play a game, that's what you did. And I was blessed. A shout out to somebody, I haven't mentioned his name for a long time. His name is Cornelius Fowler. He was mathematics teacher in my high school. And he petitioned the school to get us a couple computers. And so I was fortunate enough to, I have, I guess, whatever the Lord blessed me with, some math and science capabilities. And he saw that, and he really encouraged me to get into this kind of little class, and then kind of after school club, and we would code. And we didn't do anything mind-boggling. We'd solve little math problems and things like that, as I said, but it really piqued my interest. And what was cool about it was that because there was no software, like we had to write at the machine level to make everything happen. So if you, like, we would be down, for those of you geeking out, like we would be sometimes inside the processor, basically writing assembly code, speaking directly to the processor to perform a multiplication function or something like that. So anyway, we were really down in the bowels, and I enjoyed that. I enjoyed kind of that. What I now look back at is realize that where I loved to live was in that interface between man and machine. So at the true absolute level, right? So I was writing software, but I was talking directly to the hardware. Maybe much like a robotics person might today do that, right? They're talking to that hardware, and they want that hardware to respond a certain way. It's very different than I think the way most people learn software today. They learn about programming websites or programming databases or things like that. There's a whole different world. So I ended up getting a degree in computer science. Interestingly, I was 6 credits short of a degree in mathematics, but I also got a degree in economics too. So, which seems fortuitous now, many years later. It was kind of just an interest area at the time. And obviously, I'm sure we'll talk about this later, but I think most of you probably could understand how a guy with a background in technology and a background in economics might find this to be a very interesting space to be in. So I went to school. I got out of college in 1986, and the IBM PC had been born in 1984. So the first period of standardization was starting to come about, because this previous world was very proprietary, right? Every computer was different. Mm-hmm. And so the hardware and the hardware was unique. The software was unique. There was no big market. So the IBM PC was an open hardware and software architecture, and it allowed competitors to come in. And so out of college, I had 2 job offers. Very difficult job market in 1986. We were in the depths of a horrible recession. And I was pretty disappointed. I only had 2 job offers. I Ironically, one was with the National Security Agency. I would have been a spy for the National Security Agency, or become an engineer for a company called Zenith, which was one of the biggest TV brands in the world, but also had a computer division. And obviously, I didn't become a spy. I took the other route and became an engineer. And just again, stroke of luck, I got put on a team to help work on what we would now consider, at least I would consider, the first laptop computer ever. Which and by laptop I mean something with what we call a clamshell design, meaning it kind of folds over, that it has an LCD type screen, that it had rotating media, which was floppy disks and tiny little hard drives at the time, like 5 megabyte hard drives, and battery operated. And so that product was, by the way, called the Zenith Super Sport. You can actually look it up, and if anybody interested, you could look it up and Google it. And it was very successful. We won a contract with the Air Force and supplied 275,000 of them to the Air Force, and it made us in the early days the largest laptop maker in the world. And for a young guy at the time, I got out of college at 21 years old, so it was quite a thrill to be working at that leading edge. And I think something that kind of translates to Bitcoin is that the only reason I had that opportunity was that at the time, people didn't believe in personal computing. On the whole, the market completely dismissed personal computing. And so the more seasoned engineers, they didn't want to work for a personal computer company. They wanted to go work on the mainframe computers and the supercomputers and like those sort of things, And so I had an opportunity because I was willing to go work on a personal computer, and I, it was the I don't know, what would it be? It was like, the JV team of the JV team of technology at the time, and so nobody wanted to do it, but it ended up being the ride of a lifetime, right? Or at least what I thought was the ride of a lifetime. And so I ended up, we'll cut it short a little bit, but I ended up spending 6 years there, continuing to design computers, and helping market computers. And then I had a vision with a couple other guys that we saw the direction of mobile computing going a different direction. And by that, what I meant was, in summary, there was a thought, because we were so successful, the company I was at was so successful, that instead of continuing to innovate, making laptops smaller, making them lighter, making them more mobile, the pressure came, how do you make them cheaper? And it's a classic mistake, by the way. Classic mistake, and I didn't believe in it as a couple other people didn't do. So when I was 27 years old, I left. I had just gotten married a little bit before that. I had a 1-year-old daughter. It was a terrifying time to go do a startup, not knowing, but luckily the team that we put together, which was just a couple of us guys, but a couple of them were older, by the way. I was the most junior member to break off. We had great connections with the Japanese, and we secured $15 million worth of funding in 1991 from Mitsui and Sanyo, both Japanese companies, and they shared our vision, and so we went and designed a 2.2 pound product that ran Windows. Windows had just come out, and it was powerful enough to run Windows, 2.2 pounds, had a couple hours of battery life, and it was a revolutionary product. We didn't have the resources, though, after spending about a year and a half developing this thing. We didn't have the resources to market it, because, it's one thing to develop a computer and be able to produce them. It's another thing to have a sales arm and a customer support team and all those other things. And we didn't have the money or the resources to go make that part happen. So we started shopping the design to other companies to put their name on it. And we were able to convince Gateway to buy it. And they bought the computer, and then essentially they bought the company and me a little bit after that. And so that was an exciting time for me. It was not a massive exit like people get these days. You know, it was a much smaller transaction, but I got a bunch of Gateway stock pre-IPO. And then in 93 was I had joined Gateway with the intent of continuing to develop laptops, but also create a new business unit within Gateway, which I did. And then was part of that team that took Gateway public in 93. And, you know, we'll maybe talk some more about public companies a bit later. But, you know, started a ride for the next 11 or 12 years that I am so blessed to have been part of. The PC market exploded in that period. You know, I'm guessing a lot of people listening now, maybe you were born in that era. Hopefully some of you remember Gateway, but we became one of the largest personal computer companies in the world. We were kind of known as a company that pushed the edge technologically. You know, so if you wanted the fastest computer and you wanted a great value on the fastest computer, you know, we were that company. And so I got, over the course of that time period, I was able to grow the company's business unit in laptops from 0 to $1 billion in annual revenue. We became one of the largest laptop companies, and then moved on to some other things. Eventually, as you mentioned in the opening, I became the chief technical officer, managing the development of everything, which was laptops, desktops, servers. We actually, for 1 year in 2002, were the largest plasma TV brand in the world. So I helped develop those products. We did MP3 players and digital cameras. And so I was really able to kind of geek out in that period. And I also, in that same era, started running Gateway's international businesses. So I managed all the overseas businesses. I was already spending a massive amount of my time overseas because there had been a shift in that era that might not be obvious now, but it used to be, if you looked at like the 70s and the 80s and the 90s, the US always led. New technology came out and the US market adopted it first. And there's an inflection point right around the turn of the century where that changed. And so we started to see things like gaming, texting, like these sort of things were not being led in the US, they were being led in other markets. So I started, the technology was being developed, the core technology was being developed typically in Asia, but also the usage models were coming there. So I had to spend a lot of time there in these places, kind of observing, and then adapting it and say, well, I remember distinctly, my wife happens to be from the Philippines. And in the early 2000s, forgive me if the year is wrong, but I remember having a stat that the average American who owned a cell phone was sending 1 text per day at that time period. The average Filipino was sending 23. So like, I had to go there and like understand why is that happening? What's different? And is that going to translate back into the US? And so, and part of the reason I'm talking about this is we're looking at things like what's happening in Bitcoin Beach or Bitcoin Island in the Philippines or these other places. And so technology now is just as likely to erupt out of a place that is not economically privileged. it may be even more likely. They realize it, they see it, they exploit the technology more quickly. And I think those of us in the developed markets are slower to adapt or adopt.
Yeah, I think, I mean, that was a fascinating story, and the later points also just unreal there. And don't ever, yeah, please don't feel you need to ever cut anything short. Just enjoying that immensely. And you mentioned a lot of things there, though. I do want to note on, when do you remember when the Apple IIc might have came out? Was that around 84, 85, 86?
Yeah, it was, I might have the year wrong, but it was right in the same, it was around
Yeah.
80. It was maybe 80, it was might have even been 82 or 83. But well, again, they were part of the same kind of they survived. They're the only survivor of that, mainly because they did the work on the software and interface side.
I think I had an Apple IIc, or maybe it was a IIe in the house at a very young age. My parents were public school teachers, but my mom really caught on to computers in education very early, and brought it into the house, specifically the computer. And then I do remember very clearly in high school, one of my best friends was very excited to get a computer. He did all his research, and he came down to Gateway. And this was in like 93 or 94. And it was a really big deal. It was the most expensive one. I remember he was noting that. It was all for gaming. He was looking for power and whatever he was looking for. And he went with Gateway. And I don't remember, was the box famous back then?
Oh, absolutely. That was, in fact, I think it was in 99. We were on a great run. We had reached about $9 billion in annual revenue. Again, not adjusted for inflation, that would make it probably a $25 billion company, today. Selling several million personal computers a year. And our trademark was the boxes, which were almost exclusively delivered through UPS. They were not sold in stores. Were all white with black cow spots. And they were extremely recognizable. And that symbol of the cow spotted box became one of the top 10 most recognizable brands in America by the end of the century. So, and it was like, if you looked at a survey, it would be like, Coke and IBM and AT&T and Gateway. I mean, it was a brand on par with those in that era.
Right. Where'd the cow spots come from then?
Well, it was I didn't have anything to do with it. But the founder and CEO of Gateway was a guy named Ted Waite. He's a friend of mine. He, by the way, is invested in some of our Bitcoin ventures. He's a multi-billionaire now, through the IPO and smart money management post the IPO. But he was a brilliant marketing mind. And the company was founded in Iowa and then shortly thereafter moved to South Dakota. So we were the antithesis of everything in the computer industry, right? And Bitcoiners can probably relate to this, right? So because Silicon Valley is to technology what Wall Street is to money, right? And we're in South Dakota. And we felt the best thing, again, through his vision, was to embrace that. We're not going to try to fool people. We're going to go, no, you know what? We're honest. We're hardworking. What would you expect from a computer built in Iowa or South Dakota? You'd expect it to work. You wouldn't expect it to be overpriced. You'd expect if there was a problem that somebody's going to fix it for you. Those were the basic tenets. And so I said, well, what better thing to do than embrace it by especially the coastal people think it's nothing but cows in the middle of the country. So, okay, let's give them cows. So,
yeah.
And
when did the Zenith Super Sport, I'm curious, when did it ship to the Air Force? Like, what year was that? It was like 1988 or 89?
80. We might have got some out in 86, at the end of 86, but 87 would have been most of them. then there was another version that followed it, the Super Sport 286, and there was another version that was sold to the IRS, where every IRS agent had a Zenith laptop. So
Right.
those were big moments.
Yeah. Because I mean, I always had fairly good access to computers early on. Like I said, I always had one in the home. I was an early adopter of AOL when they sent out the discs, and you can be in chat rooms. And yeah, I used to like kind of invite friends over to expose them to that stuff. And then even when I went to college, part of my scholarship was we got a computer in our dorm room. We had to share it with our suite mates, but we had a computer in the dorm room.
Yeah.
And it wasn't until I joined Ernst & Young in like 2000, or now EY, that I got a laptop from work, and that's been like standard issue since. And remember around then, because back then it was Gateway, it was Dell was huge.
Dell was big.
You had Microsoft and you had IBM.
Well, Microsoft never made hardware.
Not Microsoft. Yeah, not Microsoft. I guess other PCs, but
there were, Toshiba was in the laptop space. Toshiba was a competitor. IBM, Dell, Compaq, HP.
Yeah,
those were, I may, if I missed somebody
it seemed like as the computer got bigger, they didn't get better, like you said. Because I mean, Gateway is, I think, the best of all of them, and it didn't seem to survive like Dell and Compaq and HP. And I always saw that as kind of a shame or weird, or it's always how, like, maybe the market chose VHS over Beta, and you always wonder why.
Well, I think I'll tell you a very short version of the story of why. And it had nothing to do. So as we approach the end of the decade, 2000, some of us had been there for, I had been working in the PC industry for 14, 15 years at that point. A lot of the early Gateway people had done the same thing. We'd done okay financially. But as a public company, I think maybe I'll tell a little even bigger version of the story. So as a public company, though, and a big public company, we were getting a lot of pressure. Every quarter was a lot of pressure to hit numbers, to hit margin goals, to hit revenue goals, to hit operating cost goals, to have balance sheets that look the right way. So you have an accounting background, hey, what's your cash on hand? What's your receivables? All these sort of things. And the smallest minutia could send the stock, off into left field. And honestly, some of us were a little tired. I was still a young man. I was 34 at the time. But this pressure had come in. So Ed Wade, who I mentioned before, he was kind of burnt out, and he's worth a couple $2 billion at this point too. So he said, "Hey, I'm going to step down as CEO. I'll stay on as chairman, but I need to step out." And Wall Street had been pressuring, like, hey, because most of the management team at that time was also those of us that had been there from essentially the beginning and grew it. Okay. And not all of us, I went to the University of Wisconsin, Milwaukee. I didn't go to MIT or Berkeley, and that was true of the whole team. Ted actually never finished college. So, and we didn't care, right? It was like, hey, you get the job done or you don't. And if you don't, you don't have a job. And if you do, then, can you take on more responsibility? Oh, you can. Okay, well, I'll give you more. That was how it was. Well, the Wall Street analysts don't think that way. You don't have enough people from Brown or Columbia or Harvard or whatever on your team. And so there was pressure to bring in some a new CEO and also several new members of the management team, which they did. They hired a guy actually from AT&T, like a rising star, like he was going to be the CEO of AT&T if he had stayed, but he's going to have to wait 10 more years. So, took the position at Gateway. Guys from GE and GM and, places like that were started to infiltrate. When Ted left, he's a friend of mine. He was a friend of mine then. He's a friend of mine today. I'm like, well, I don't want to work here anymore. Like I was fried. I didn't like the cultural change that had come in. I didn't like the directional change that was happening strategically. I left. I can tell you the exact day. I left on June 15th of the year 2000. I was 35 years old and I thought I was retiring. And Gateway stock was trading at about 80 at that point, by the way. So from essentially zero at the IPO, it was like $1 at the IPO to 80. So all of us had done very well. Well, 6 months later, and by the way, I didn't just, do the FU and throw it. I gave him 6 months notice. So 6 months before that, I said, I'm leaving. I'll help you find a replacement. I'll train the replacement. It was an elegant, don't burn the bridge exit. 6 months later, actually, I'll back up even a little bit. Less than 3 months after resigning and retiring, quote unquote retiring, I realized I can't retire. I started a beer company. We won't go into that today, but I started this beer company and I launched the company in January of that year. We started production. I had just come home from a visit to my production facility where we're making the beer. And at the time I was using Yahoo for kind of my news feed, and a flash came up. It said, Gateway fires CEO, Headweight, returning as CEO. Right away, I fired an email off to Ted. I said, Ted, I'm so happy you needed to fire that dude, and let me know what I can do. And he wrote back immediately. By the way, I found out, like, it just so happened I was the very first email he got. They had hit the thing on the press release, and then he knew his inbox was going to light up, so he's just waiting to see what would happen. And mine was the very first email in his inbox that day. Right after that, he said, you were going to be one of my next calls. I need you in San Diego, because he had moved the headquarters, by the way, from South Dakota to San Diego. I need you in San Diego in the morning. He's my friend, and I owed a lot to him, so I just said okay. I didn't ask why. I just, so I showed up the next day, and he said, you're back as CTO. Like he didn't ask. He told me. And because of my relationship with him and all that Gabe had done for me, I returned. And several others who were my peers who had been part of that group also returned. And so it was kind of like the band is back together, so sort of thing, like the Led Zeppelin reunion sort of feel, like, hey, the band's back together. But unfortunately, that group had been there for a little over a year. And in that time frame, they had devastated the company financially. I think statute of limitations is now okay, so I'll say what really happened, which was they were cooking the books to make the analysts. They were shipping bricks, literally shipping bricks. They were spending extravagantly, buying things like Gulfstream jets for the executives, creating things like hiring a Michelin chef to cook for the executive team. And these are not Gateway things. I mean, maybe, I don't think it's appropriate for any company, but they are not Gateway cultural things. And these guys were crooks that should have been in jail. I wish they had been in jail, but we had the unfortunate circumstance of having to protect them. Because if we didn't, it was Enron. And we did everything in our power to save the company. And that meant the difficult moral dilemma of protecting criminals who had who had raped and pillaged the company to the point that, and we tried everything we could to save the company, and I spent 3 more years there. As did the other guys. We worked tooth and nail to try to overcome it, but ultimately realized that we just couldn't dig out of the hole they had dug. And so we had no choice but to look for buyers, or to sell, somebody that could buy us. And that's what ended up happening. So there was a whole series of things that happened, but ultimately it was Acer that bought Gateway. So Acer owns Gateway to this day. The brand still exists. There are select places you can go in and you could still buy one, but it's it's a shame. I'm very blessed to have been through the ride. The things I learned and the things I saw, are irreplaceable. But it's always a bit of sadness, right? There's a little bit of mourning that something that you worked so hard on that had reached such heights was then, out of greed was what really was its downfall, and not the greed of the core people, but the greed of some outside, I'd say Wall Street influence people.
It's an incredible story. It's also, immensely unfortunate. Also in my career as both a public accountant and as a consultant, mostly to public companies at Fortune 500 companies, and I've done startups and gone public and mergers and acquisitions, but I've seen that way too many times, and mostly by the second and third teams, usually not the founding team or the family. There's the old adage. It's really hard for a family business to last more than 3 generations. I have a client that's, was a 3rd generation, 100-year company, family name company, is now corporate. I've also seen there's so many aspects of what you're talking about in terms of that takeover too, or sort of that new team brought in. It's usually PE or venture capital or hedge fund, and they can gouge the company in so many ways, from legal to illegal, and even just misguided, just taking it in the wrong way from a marketing perspective, a vision, strategy, gutting the soul, the ethos, the purpose, and then just the short-term nature of public companies, the 90-day cycle. And I've just seen so many even good intentioned projects get killed or destroyed unintentionally because short-term priorities always take precedent.
Well, I'm glad you said that. There were a couple key words in there that resonate with me, that are part of something that I talk about fairly frequently. Although I'm somewhat of a lone voice, so I don't hear, but here goes. I believe that any public mining company is operating well outside the ethos of Bitcoin, and that anybody that owns stock in a public mining company is exhibiting behavior outside the ethos of Bitcoin. A Bitcoin mining company is not a proxy for Bitcoin. And if we look back at some of the things that you and I just discussed in our personal experiences, what you'll see is that a public company is by definition legally and ethically obligated to operate, at least in part, with high time preference behaviors. And the longer time goes by and the further you get from the core founding people, the worse it's going to get. And what will happen is, over time, that company will start making decisions that are not sound. They can't help but worry about their stock options and the stock that they hold, the management team. It'll change some of the decision making. I'll speak to, here's an example from Gateway. Before Gateway was public, and it was kind of the last of the major companies to go public, when end of quarter would come, say we were within the last 2 weeks of a fiscal quarter. Let's say, just as an example, it's December 15th. You get a phone call from Intel, from Seagate, a hard drive supplier, from Microsoft, from some other public company, and they'd say, hey, Gateway, we know you're sitting on a pile of cash, which we were. We had a lot of money. And we're missing our number. Would you like to buy, let's say it was Intel, would you like to buy all of your Q1 chips in December at a 20% discount? Hell yeah, we would. Do we care if we drain our cash to almost nothing? No, because nobody's going to look at our balance sheet. Nobody's going to question our motive. What we do know is that in the first quarter, we're going to have margins that are through the roof. And we're going to reacquire cash at a massive level. If you're a public company, and you would know this as an accountant, if you went to the market, what the market would see is bloated inventory and no cash. What's going to happen? Stock's going to plummet. So the post-public Gateway didn't take those deals very often. And to the long-term detriment of the company. And that's just one example of things that happen. The way the finance people start taking over, the investor relations people start taking over, the influence of the analysts start taking over. So it is my firm belief that if you're a Bitcoiner, especially in mining, and maybe we could extend this to other companies in the ethos, but I think especially when you're a mining company is a base layer company in Bitcoin, I think it's paramount that you take the high moral ground. It's what I do with my companies, of saying, no, we will operate within the ethos. Everything we do within the ethos. Why? Because if we don't, we are corrupting and exposing the base layer of the mining network. By the way, if you need evidence of this, look at what happened in the mining market. Okay. You saw, the collective collective we saw the public mining companies completely ruin the market for mining equipment. They had easy access to capital. They had shitty long-term planning. They went out and overbought mining equipment at epic levels. They drove the price of that mining equipment through the roof. They made it completely inaccessible to the plebs and the smaller companies. We'll talk about some of that maybe in a little bit. So if we put on our economics hat, what did they do? They ruined capital allocation. They ruined price discovery within our core system itself. Now, I don't know why there isn't more angst within the Bitcoin community against these companies. Certainly, we've seen companies like Core failed. We've seen other companies fail. We've seen a whole bunch of them struggle. But the fact that people are not irate at those companies, I find jaw-dropping. The fact that many plebs are out there still buying stock in these companies and supporting this type of behavior, I find abhorrent. And now, those companies have a right to exist. They have a right to operate as they see fit. But I challenge everybody out there listening as to whether or not you should own stock in those companies and you support those activities. Because if you're a Bitcoiner, I think you are supporting the exact opposite thing that you profess that you support.
Yeah, I think you made a really amazing point there. And to round it out a bit, and I got some of this from your work, but I've been thinking through this, I think, because of your work, the feedback loop isn't there, the right incentives in other ways as well that I'm sure you're aware. I mean, I got it from your work, but one, I think, they don't really distribute Bitcoin to their shareholders.
Correct.
So in one way, I think Bitcoiners are like, oh, well, they're hoarding Bitcoin. They're trying to hold Bitcoin. They have Bitcoin reserves, but they're really incentivized to sell the Bitcoin in various different reasons. One, even just in good times to distribute fiat. They can't distribute the Bitcoin. In bad times, they got to sell at the worst time for everyone, including themselves, to pay bills and other things. And then when they don't want to sell, and they had sell pressure at the worst time. So the feedback loop isn't really a positive one for like you're saying, for the base layer. I think a lot of plebs see it as a way to gamble, to speculate. And what I mean by that is, I like to think I don't want to buy anything I would ever want to sell. But I think some people are saying, okay, well, I do want to speculate and gamble on something maybe, and I don't want to sell Bitcoin. So I'll buy this thing that has Bitcoin price exposure, and maybe it has a multiple beta on Bitcoin and yada, yada, yada. But I think most people who gamble in the market will lose on that as well. But
yeah, but it's what do you, I agree with you completely. And I'm betting a lot of people haven't thought about it. So,
right.
I'm here today in part because I like to say these things. I think I have certain messages from my background and my experience that maybe others haven't had. But I really ask people out there to think about it. I'm not trying to crash the stock or anything like that, but I'm asking, hey, when you invest, if you're a Bitcoiner, if you're just if you're a fiat monger, go crazy. Okay. But if you're a Bitcoiner and you think you live within the ethos, then do you want to support this? It's a step removed from supporting the development of CBDCs or other things that the Cantillon effect. I mean, basically, that's what you're doing too, is you're supporting these companies which are great beneficiaries of the Cantillon effect. So, at your support, you're owning those stocks feeds that beast. So, to each his own, make your own decision. But I won't ever own stock in a public mining company. I've had inquiries about taking my company public. I will not do that. Could I have grown faster? Yep. Could I, would it have been a positive thing though? I don't know. I don't really crave to be the CEO of a public company either though. That's, I'm 58 years old. That ship sailed a long time ago. There was a point in my life when there was an aura about that, right? And I was a C-suite executive in a Fortune 200 company. So I knew what it was like. But interestingly, once I rose to that level, after being exposed to that level and for a few years, I didn't, by the end, I didn't want to be a CEO of a Fortune 500 public company anymore. That the dream had changed.
Especially in the modern era where most last 2 to 5 years tops, they're never going to see a real long-term vision be set in. They have very little capital when they come into the role. There's a lot of career risk in these roles. They do what the business plan says or what's expected of the MBA or what their consultants tell them. It's hard for them to get there. They come in with no capital. They can't bring in the team like Ted did. They can't get the band back together and be like, I'm going to get the best CTO because that guy just came in 6 months before him. They can't bring in the new head of HR that they trust and legal and and they're going to burn a lot of bridges if they do. And they can't get down into the trenches. They have no idea what's really going on in the back office, what the real problems are. Oh man, it sounds like a nightmare. But so we're coming all out of all that. You have the background, but I do still think your story gets even more unique coming into Bitcoin. So what is your, rabbit hole story? How did you kind of find yourself in the space?
Yeah. Through the back door is how I came in. 2017, I am sitting at home one evening and my phone rings. It's a Seattle phone number. Oh, I don't know anybody in Seattle. And my wife, who I give a lot of credit for at least what's happened in my career to my wife, she's very instinctual. She said, I said, Seattle, like, you know how you tip your phone to somebody, I go, Seattle, I don't know anybody in Seattle. She said, answer it. I said, what? She said, answer it. Okay. You know, so I've learned to trust her. So I answer the phone. It's a guy named Bill. I'll forego the last name, but it's a guy named Bill. Said, Bob, do you remember me? We worked together at Gateway. I did. He was on one of my teams. He said, I'm really happy to track you down. There's another member of the band who had given him my number. He found me. He said, I need somebody to build 300 Ethereum mining servers for me. I said, okay. I was running several other businesses at the time, very distant, but, and I thought about it, this request like a computer guy, and goes, well, I said, why don't you just go to Dell and buy them? I said, no, you don't understand. They have to do blah, 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 blah. I said, well, oh, okay. And he said, plus I want to use this NVIDIA chip and I can't get any of the NVIDIA chips. So, well, okay. So I hung up the phone and I thought about it. I said, well, I suppose I could build them, but I don't know if I can get the chips. But a little piece of history going back to Gateway. In the early 90s, I can't remember the specific year, a startup walked through our door one day and tried to convince us to buy some of their chips, and it was NVIDIA. They had no customers, not a single customer. And we gave them a chance. We're the very first company in the world to design NVIDIA silicon into one of our computers. So myself and Keith Thomas, who's president of Barefoot Mining and former head of desktop engineering at Gateway, we called up NVIDIA that morning, said, you know, we had these old, like, dusted off the business cards. We hadn't talked to anybody in over 10 years, and said, do you remember us? Yeah, we remember you. And, well, we want to build these computers, and we need a whole bunch of your chips. Would you sell them to us? Now, anybody that's a gamer knows that those are not easy things to get. And, but let's just say we cashed in some chips from a long time ago. And I guess cashed in some chips is an interesting euphemism. But yeah, we called in some favors, and they were happy to comply. And they said, we trust you guys that you'll use these chips. You won't make them into graphics cards. You'll only build specific equipment for Ethereum mining. So we did. So we took that order, which was, by the way, like 300 of them. And we sold them for $6,000 each. So we went from nothing to starting a company 72 hours later with an almost a $2 million purchase order as our first order. Like, that was, you know, and so that company is known as Divi Systems, which is part of the intro.
How did it get to 2 million again? What were the variables here?
300 servers at $6,000 some each.
6,000 each. That's what you said. Okay.
Yeah.
And why did they care what you would use them for?
Excuse me?
Why did they care what you would use them for?
Because there's a massive, they control the distribution of their chips very, very closely. And they don't want graphics cards entering the market. Will they be essentially entering as a gray market product? And they have a couple other brands that exclusively market their cards, and they didn't want competition.
Protect those relationships.
Yeah.
So, and because I always think of them as graphics cards, but they're, from their perspective, these weren't being used as graphics cards. They were just being used as something for Ethereum mining, and it's like off-market use for them, and they're not interfering with the relationship. Got it.
But we were using 8 of the GPUs in every server, so we needed, just for that first order, we needed 2,400 chips. So it was still a fair number of chips. I mean, one graphics card built out of those was selling at the time for about $800. So retail. So obviously they didn't.
Right. And so what kind of ETH farm is this person building, or this entity building, with $2 million in
Well, yeah,
in
I mean,
chips?
this particular customer had his own farm. I can't remember where at this point. It's been a little too long. I can't remember where we shipped them. But what ended up happening was we said, well, again, we have our computer hat on, right? We're guys selling computers. These are just computers. So we went kind of to family, friends, our network, said, hey, we're building these things. Anybody else want one? And we were kind of surprised by the response. And we had a fair amount of profit in there, by the way, too. We were making a very healthy margin on them. Well, people started to say yes, but often it was a yes, but I'll only buy them if you run them for me. In other words, host them for me. So we ended up starting a second company called Barefoot Mining, which was the hosting. So Divi Systems was building and selling the computers, and then Barefoot Mining would host them for people. And then shortly thereafter, again, we're just kind of running them for people. We had the technical capability to do this stuff. We rented the old Gateway data center, actually. We took over the old Gateway data center in South Dakota and started stuffing these computers in there. And we were making money. And at some point we said, hey, why don't we just start taking the profit and buying our own machines and mining with it? Very fiat-like, frankly. Very fiat-like. So we did that. We were quite successful at it. But about a year in, or now in 2018, I finally had a chance to breathe, because we had this company go from zero to, multi-million dollars in revenue in a matter of weeks. Like, it was amazing, right? And we're doing fantastic. But I had my technology hat on, I had my economics hat on. I started looking at Ethereum and I started to go, oh, I don't think I really like this. There's some warts here. And I started to look at Bitcoin harder. And we were getting some requests for Bitcoin too. So make a long story short, I over the course of 2018, I don't want to say it was an epiphany, like there was an aha moment. It was a gradual thing, but I started to lose my luster. And we went out and realized we had to have a presence in Bitcoin. Unfortunately, we didn't have access to the silicon, the actual silicon ASICs, to build our own equipment. But we did the next best thing, which is we reached out to Bitfury, which was the largest European maker of Bitcoin mining equipment. And we signed a deal to become the US distributor and service center for them. So we, by the way, still do that to this day. We still have a relationship with them through Divi Systems. And then we started to grow, investing again. We're just kind of pouring the profit back into mining equipment of our own in large part, or investing in more infrastructure, because, we started having to bring up more sites and buy containers and do these other things. And so we've largely poured the money back in. But like I said, we don't have any bank loans, and we don't have any, certainly never capitalized it through an IPO, which obviously constrained our growth. Yeah. But anyway, that's how we got to Bitcoin. And I would say, first I did it as a business, but then, as we got into 2019, I realized that technology and economics had a baby, and it was Bitcoin. And that, for whatever reason, that happened to match exactly with my educational background and certainly on the technology side, my work experience. I had always tried to stay up with my economic knowledge base. And interestingly, in the early 2000s, I had found Austrian economics, because my educational background was obviously all Keynesian stuff. But then I found Austrian economics earlier in the first decade of the century and had started exploring that and had developed an affinity for that well ahead of Bitcoin. So there's all these stars aligned for me. You know what I'll also say though is I left Gateway in 2004. This thing happened in 2017. So what happened in those 13 years? Well, I had done a technology incubator. I started, we probably started 20 to 25 companies through that and incubated them. Some made it, some didn't, across all kinds of different avenues. But I was honestly kind of bored. I was searching for something. I think much like, I hope this doesn't come off right. I think it's a lot like a professional athlete in a way. I had this experience in business going from nothing to, like I said, I'm a C-suite executive in a $9 billion Fortune 200 company. I'm flying all over the world. I'm literally meeting with I'm meeting with the president of Taiwan. I'm meeting with the president of Samsung and Sanyo, and I'm connected in this way. And then I left, and it stopped. Right, and the world goes on. Right, the world marches on, and I think I can really relate to the feeling of an athlete who has a 15 or 20 year professional sports career and then doesn't, then is, just going grocery shopping and doing regular stuff. And, you're trying to find ways to be useful. And what my wife would say, and she does say, she said, when this happened in 2017, and then definitely the last couple of years, she said, my aura changed, like my vigor changed, my youthfulness changed. I have a reason. We're sitting here at 9 o'clock on a, Tuesday evening, and I'm full of energy. I could probably talk to you till midnight if you want, because I'm so passionate about this. And I feel like Foss is Greg's a friend of mine. Larry Lepard's a friend of mine. You talked about the panel I was on, and I know these guys beyond panels and all that. We're friends personally. And I think all of us look at this in our own way as a calling, like, hey, we're kind of the elders in the community, maybe in a certain way. And there's a few, obviously Max Kaiser, an older guy, Gary Leland, there's some of us, but there are not that many of us. We each came from a different avenue. As far as I know, I'm really the only guy that came through the Fortune 500 and the technology route, though. And so I think, like, hey, I have a belief in God and that things happen for a reason. And, like, hey, I went on this journey, and maybe the whole reason I did the PC thing, as great as that wasn't for the PC thing. It's so that I can help move the Bitcoin thing through this stage, because we are going through a stage, and I think a lot of people don't understand how hard it's going to be for Bitcoin to grow. We are going to grow. We are going to win, by the way. Don't get me wrong. But there's going to be a lot of bumps and bruises along the way. There's going to be a lot of change along the way. We talked about the mining companies before. I think a lot of the companies that maybe were the shining stars of this market over the last 3 or 4 years, 3 years from now, you might not remember who they were. And you've seen some of that, right? We've seen exchanges blow up. We've seen big mining companies go up. And, I like in the early and mid 90s, for instance, a brand like Compaq, I bet most of the audience doesn't even know who Compaq was. Some of you may not know who Gateway is. But these were the powerhouses of these things. And it doesn't take much to topple them. Just like it doesn't take much for Silicon Valley Bank to topple. It doesn't take much for a big company to topple either. They're very fragile.
Yeah, I take to heart a lot of what you said there, especially around the passion that Bitcoin and being in the space ignites. I relate to in the sense that, when we were kids growing up playing sports, we were in the moment. Whether it was a team sport or an individual sport, but in team sports, you had collaboration. And I think when you have a career more so than a job or a career that you're passionate about, or you're part of a team environment where like you're kind of playing for keeps, but like you can have a real big impact on what's happening. You're in the moment a lot. And then if your career transitions to a place where you're taking a job more for whether it's the pay or the compensation, or you just got less impact, or the people around you have less passion, or, I mean, it's hard to be aligned with every single opportunity in the world that comes your way. But Bitcoin kind of brings that alignment. And I think it helps us get in the moment, like you were saying, and feel like we're living in the moment versus just having a job. And then you said something also that you were searching, and obviously you were primed for Bitcoin. But I have to ask, so like when you get that call, your wife take the call, you take the call, it leads to a great business deal. That's great in and of itself. But like, they're probably, I don't know if it was on that call, at some point you're like, why does he want these chips? What's Ethereum? What's Bitcoin? I know you're primed for it. I know how you can get it later on, but what was your reaction to it then? Was it anything more than like, oh, and some people might have just been happy to resell this equipment. Then they find out, is it video game money? Is it magic internet money? Is it, and then to actually go down the path is another thing. And obviously you get it, but like, what was some of your initial reactions? I mean, were some of the people, what they were telling you so off the wall wrong in retrospect? They're like, it's this or that, the people you're calling, the guy who's buying. I mean, do you remember any of sort of the initial reactions, or what people were telling you, or did it all pan out to be true or not true?
Well, I had my first exposure to Bitcoin had been about 5 years earlier. And there's an interesting story. So we all have the time we missed, right? So one of the companies I was running, like 2012, was a computer refurbishment company. So we would take computers that were sitting in a school or a large corporation, city government, place like that. And let's say let's say they were 3 or 4 years old, and now it's time to buy the new ones, right? So we would go in and buy the old ones at pennies on the dollar and bring them in and, refurbish them, clean the hard drives, maybe even put a bigger hard drive in, more RAM, and then resell them as refurbished computers. And we had a large warehouse, about a 60,000 foot warehouse, and it was full of these things, thousands and thousands of them. We had a guy that worked for us. His name was Scott. Wonderful man, wonderful family. And, but Scott always had some sort of theory, about something, and it was always a little off the beaten path, right? I loved the guy. So one day he comes in and he said, I believe it was 2012, early 2012. He said, hey, I'm starting to mine Bitcoin at home, but we have all these thousands of computers here that we're waiting to sell. Why don't we, while we're waiting to sell them, why don't we turn them all on and mine Bitcoin? So Keith and I mentioned Keith earlier, we were in that business together too. We said, well, what's Bitcoin? We did we did the 15-minute research, unfortunately, not the deep dive, and went right into engineering mode, which is, okay, well, we get the basics, very basics of what mining is. How much energy is it going to take? And, how much will we get? And we saw very marginal benefit, right? And complete fiat mentality to the whole thing. Like if we had done it, we would have sold it all right away for fiat anyway. But we had the capability to be the largest mining company in the world overnight in 2012. And I already owned all the hardware, so I missed it. So I had, by the way, Scott, and I sending to the story, Scott ended up continuing to do it for several years in his home. And I remember he had made enough money to he then sold it all, I don't know, maybe 2016, and got enough money to like buy a home for his family, like outright buy a house for his family. So, wonderful story, but give you some idea what I could have done with. Yeah. So
but great story nonetheless.
But so I was kind of sitting there a little bit, but I still didn't understand it. And so the true answer to your question is, when the phone call came, I still thought about it with a complete fiat mindset. Sure. And I didn't believe in cryptocurrency. Now, 60 days later, I had gained enough knowledge that as I started to try to sell these things to other people, I was still a little bit in Ethereum mode. And I'm like, well, Ethereum is going to be the world computer. And I believed in Bitcoin enough to say, Bitcoin may be the internet money, and Ethereum is going to be the world computer. And you might remember those kind of mantras. And so I held a couple little seminars and brought people in, and I would explain the basics of some of this stuff. I probably would be so embarrassed if I had to watch a video of me talking in that era, because I would have just completely botched it. But because of my background, I think a lot of people bought it. Just said, well, if Bob thinks it's okay, I'll buy 3 machines. And we're dealing with like higher net worth people. Like, okay, I'll throw 20 grand at this, and see what happens. Now, interestingly, even on the Ethereum side, though, I have several close friends that put 50 grand into equipment in that time period and cashed out with $1 million like 4 years later. And that's how. So I have some very, very happy early customers from that era. But, I wish I could say there was an epiphany moment, but I think when I started to see things like and understand absolute scarcity, like I'll say that absolute scarcity is one of the first things. There was a moment like it clicked, like, oh, there's only 21 million. And then I really believed that there were. So I knew that, but then there was a point when I understood that it really was a limit. Like I didn't believe it at first. I knew it, but then there was a sinking in moment, and like, oh, wow, that's a game changer. Right. Start thinking through the first order effects and the second order effects and the third order effects of that. Oh my God, that changes everything. And I pre Jeff Booth, and I've gotten to know Jeff some personally too. And, we have some very good synergies philosophically, Jeff and I. And, I started to kind of piece together some of those things, like, hey, why is it that the PC market, the prices go down? We bring more functionality every day, better value every day, cheaper prices every day. Why doesn't that happen in anything else? No. And why is it that all the efficiency these computers are bringing isn't directly impacting this other stuff? Why? Right. Why is it that like the financing of a home, all the paperwork and all this stuff, like the cost of going through the deeding and titling process, which you charge thousands of dollars for whenever you buy a property. Like, they haven't changed their prices since the personal computer. It's the same, right. But they're so much more efficient. Why is that? Like, and so, price of tomorrow and Jeff put those theories into play a little better than anybody else has to date. They're so important, but I think it was when Bitcoin, that moment of realizing Bitcoin enables that to work, that was big.
Yeah, I mean, I could definitely see how you were primed, and it's good. You have to go through the journey of putting all the pieces together, and it takes a little bit of time. But yeah, and Jeff's really great with providing that angle of clarity on just what. Yeah, every electronics is getting cheaper, and everything else that's getting cheaper is usually like electronics are getting cheaper and better. Like your TV is getting bigger and somewhat cheaper, Your electronics are getting cheaper and much better, and then like everything else is just getting made worse to maintain price, or getting shrinkflation or some other game or gimmick that's
Right.
stealing from the customer, and pitting customers and producers against each other. So thinking back to 2017, though, I want to talk about the miner's trilemma, the article that you wrote, and
Okay.
kind of your evolution on that. So what is the miner's trilemma, and what did you see change from like 2017 to 2019 to even 2020, 2021?
Yeah. Okay. Well, let's first explain what the miner's trilemma is. So I've posited through an article that I wrote in Bitcoin Magazine that whenever you're trying to bring up a mining operation, there are three key things that have to come together. One is energy, one is the mining equipment, and one is capital. And there are two kind of sub postulates within the hypothesis. One is that at any point in time, one of them will always be hard. And the second is, as soon as one that is hard starts becoming easy, it will force a different one to become hard. So what it means is you have these three things: money, energy, and equipment. And to bring a mining operation up, you have to solve all three. Over time, which one is hard will shift. So if you want to be successful in mining, you have to be able to solve for all three of them when it's hard. You have to have a way of navigating through that. So if we go back to 2017, maybe I'll talk about three time frames. First, 2017. What was happening in 2017? In 2017, equipment was very hard to get. Why did I get in this business? I'm using Ethereum in this case, but why did I get in the business then? Because nobody else in the world could get NVIDIA chips. Why did I have success? Because I had a golden ticket that could get me NVIDIA chips. Because finding energy then was not hard. It was very easy. Like there, and we weren't looking for that much, right? We might look for a few hundred kilowatts at that time. The machines didn't consume as much power, and was easy to find. And the capital, well, hell, they came to me with the money to get started. And honestly, people kind of threw money at me for the first year, as much as I could build. It was not hard. So in that case, the miner's trilemma was capital easy, energy easy, equipment hard. Now, we entered in 2018 a bear market, right? So 2019 into 2020, we were dealing with equipment that was easy to get, energy that was easy to get, pretty hard to find people to put money into it, hard to raise capital. Post the China mining ban, I'm talking in the US Western markets, obviously, right now. What happened? Well, flipped again. Capital super easy. Energy getting harder. Not as easy because we're a little bigger scale now, getting harder. And equipment, impossible. Absolutely impossible. We talked about this. So much money being thrown because now we have these public mining companies who have thrown this money in. And, the chip making capabilities of the major vendors, Bitmain and MicroBT, and their subcontractor, TSMC or Samsung, the two only foundries in the world that can produce chips, they're very limited. There's a very finite amount of chips that can come out. It's not like a different market where, hey, if you're, I don't know, selling a lot of golf tees, you just work overtime and you get more golf tees, right? It doesn't work that way. It's a market with a finite constraint. So as the mining companies basically committed to 100% of the manufacturing output for months ahead of time, and then drove the price of the few that were getting out through the roof. And they were overpaying themselves too. Well, that all came to a screeching halt last summer. And we went back to the state of lots of equipment is easy. Energy is now kind of moderate hard. It's getting even harder and harder. Capital impossible, you know. So anyway, that's kind of a bit if we look at these different checkpoints. And so I would expect it to shift again. At some point we're going to have a bull run in mining, and capital will flow in like crazy, and it'll drive up. It'll saturate the energy market. We probably won't even be able to find energy, and the equipment will become impossible again. I think what's important to learn, though, is that if you're investing in mining, by the way, even for those of you who don't agree with me earlier and are going to invest in mining stocks, you invest in the bear, and do not chase the bull. But especially if you're going to invest in mining directly, like you're going to buy mining equipment, you're going to invest in a company like mine or something like that on a private basis, what will happen is this. If you wait until the thing starts taking off, you're going to find that there's a lag between when you invest the money and when that money starts producing. Because let's say I can put up a 1 megawatt site in 14 weeks. Let's just say that. Okay. A 1 megawatt mining site. Well, so if you come in with your money and the bull has already started and it's on its way, you lost 14 weeks, right? And we don't know how long the thing's going to run, and you're going to overpay a little bit. Even if you catch the beginning of the bull, you're going to overpay. If you get in 6 months after the bull started, you're going to super overpay. You miss the whole thing, you're probably going to get in right on the time where you're entering the bear. So, moral of the story, invest in mining during the bear. Like right now, we can get all the mining equipment we want. We can get phenomenal pricing. We can still get the energy. So whether it's with us or with somebody else, if you have an interest in it, now's the time. I guess we should give the disclaimer. I'm not giving financial advice, blah, 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 right? But I kind of am. But anyway, but this would be the time to invest if you're inclined that way. And when Bitcoin's back at 55,000 and global hash rates at 450 exahashes, don't jump into that, into that sucker. That's not the time.
I hear you. I want to turn to another fantastic piece. When we were in Bitcoin Day Naples, and you guys were talking about mining, and everyone was being asked what their approach is as a company or their vision. Your approach was very different, and it was very different for a few reasons, but I think that it really honed in on the Bitcoin ethos, which is decentralization in this case, and also just anti-fragility as an individual, as an entity, and as an ecosystem. Yeah. So I want to turn to the crucial role of wild horses in Bitcoin mining. And before we get into what wild horses are, what did Satoshi call miners?
He called them proof of workers. And at the time, miners and nodes were essentially synonymous. So, we live in a world where those are two very different machines. You have, several people that run nodes, but they're not miners. And we have most miners run a node, but those are two different things, right? But you have a whole bunch of mining machines. You might have one or two nodes. Like they're two different things. But so he looked at it a very different way. And that's not I'm not going to say that he didn't envision maybe some of the things that might happen, like with, big farms and big operations, but he also viewed a lot of things. Like if you read some of his writings, you'll see things about talking about like baseboard heating, replacing baseboard heating, or supplementing, home heating. He talked about things like that. And I think obviously Satoshi was brilliant, whoever he or she is, and had thought through a lot of these things in great detail. I have a feeling that Satoshi would probably share some of my concerns about where we are, or more importantly, where we're going. I think the current state is fine, but it's trending in a dangerous direction. And so with that as kind of a foreshadow, kind of back up. So I wrote that article because I want to call attention to what I think are 3 different types of mining. And I use animal analogies, just like, like we have a Glassnode has different fish types to say how big of a Bitcoiner you are, right? So I use animals to say how big of a miner are you. So I've got 3 main categories. On one end are the elephants. The elephants are massive operations, 20, 50, several hundred megawatts. They tend to be build outs in fixed locations. They take a long time to put up. If you want to put up a 50 megawatt operation, I told you I could do a megawatt in 14 weeks. If somebody put a gun to my head, maybe we could do it in 9 if I got a break on a few availabilities, right? They're 12, 15, 18-month projects. I call them elephants because they're big and powerful, but they're also slow. They're slow to grow. They're slow to move. And maybe more importantly, they're easy to hunt. They're easy to find and easy to hunt. And there aren't that many of them either. Right? In the grand scheme of things, there's just not that many. On the other end of the spectrum, we have what I call the rabbits. Now, the rabbits are all the plebs out there, hopefully some of you listening, who have an S9 in your garage, or a S19 in your office, or maybe even have a shed you threw 6 of them in. Those are the rabbits. Rabbits individually aren't very powerful, but they're everywhere. And they're pretty hard to hunt. It's hard to kill even one of them. You're never going to kill all of them. And the horses, think of them as the middle ground. They're going to be commercial operations, small to medium size. They maybe have a few hundred kilowatts to a few megawatts in any one site. They're pretty quick to bring up. The type of operation I just talked about, a megawatt would fit right in the sweet spot of what a horse is. You can raise the money for it quickly. You can do the technical work to get it implemented quickly. If something happens, you can move it. You could hunt them, and you definitely find some and kill some, but you'd never get them all. And by the way, as soon as they heard you were out hunting for them, they'd be pretty easy to move around. So we have these 3 categories. Now, we also, like animals, there are captive animals and there are wild animals. And so a captive animal is in large part an on-grid operation, meaning that the power source is controlled by a third party. And essentially, it requires the permission of that third party for you to operate your mining operation. Now, a wild horse, or theoretically a wild elephant or a wild rabbit, they control their own power. They're not beholden to a third party for that. By the way, another way of phrasing that, because we as Bitcoiners value sovereignty, is a captive elephant, horse, or rabbit is not self-sovereign, but a wild one is self-sovereign. So I think these are very important distinctions, because we know that as a community, Bitcoin mining as an industry, we are going to be targeted. The threat that we pose financially and power-wise is too great for us to not be attacked. We see it right now with the Biden proposal of a 30% tax on electricity used for Bitcoin mining. We know it's highly likely that other legislation is going to at least be bantered about to try to ban us, to try to carbon footprint us, carbon tax us. I believe that there are factions in the environmental community that will be riled up, by the way, through misinformation, to the point that they will, in their own minds, validate terrorism against us. I expect substations and mining operations to be attacked. By the way, I think 2 of them already have. I think there was an attack on the grid in North Carolina a few months ago, and also one in Washington. And it didn't get a lot of press, but in both cases, a sharpshooter, knowing exactly where to fire bullets into a substation, disrupted for several days the grid. Again, one in North Carolina, one in Washington. I think these things will be common. And we also have the issue of things like the public companies, we've spent too much time on this already, but a public company can be nationalized very easily. Now, I suppose a private one could be too, but a big public company with a certain footprint could easily be nationalized. I'm not trying to paint short-term doom and gloom, but what I am trying to say is that when what we're working on is a threat to the wealth and power of the world, we need to anticipate a response. The other thing that I think is paramount for people to understand is that, like, when I look at this, the thing I would say I'm best at as an engineer is as a system architect. And I look at Bitcoin as an ecosystem where we're trying to build money for 1,000 years. That's what I put in my head. We're trying to build money for 1,000 years. So if you take all the things that I just discussed, legislative attacks, terrorist attacks, maybe you throw in environmental disasters, all those sort of things, and you say, well, Bob, in any one year, what do you have at most? A 1% chance, a 1/100th of a percent chance of any of those things happening? Yeah, that's a fair bet. But the problem is, we're trying to build money for 1,000 years. So if you apply that small percentage to 1,000 years, it will happen. That's almost a mathematical certainty in that window. And if we design the system right from the beginning to be immune or very resistant to those attacks, they won't occur. They're less likely to occur. And certainly if they do occur, they're going to be less likely to be effective. But I think it's too easy. Again, I'll get back to I'm just banging on the public companies today. Public companies aren't worried about 1,000 years from now. It's the end of March. You know what they're worried about? They're worried about the next week and the report they're gonna put out around April 20th to the analysts. They're not worried about whether or not the elephants they're building are too easy to hunt. They're not worried about, like, I have a lot of my buddies in the industry are Texas based. God bless them. I love them. I have nothing against mining in Texas, but I think there's a belief by some of them that Texas can dominate Bitcoin mining. There certainly is a lot of power and a lot of potential there. But I would ask anybody there, what are the odds that 10 years from now, we live in a world where Beto O'Rourke is the governor of Texas instead of Jim Abbott? What are the odds that instead of Joe Biden or Donald Trump being president, we have AOC or Elizabeth Warren as president? Maybe the other one is the Secretary of Energy. How does mining look now? How does a $800 million build out in one place in West Texas? How easy is it to legislate your way against that? How easy is it to call that a terrorist activity and by executive order shut it down, send the National Guard in? I'm not predicting these things. I'm just saying that if there's a 0.1% chance of those things happening, then that's a problem. And if we go too strong in those directions, then we better be ready to deal with that problem. So that article I wrote and the follow-on, which is called Satoshi's Heel, are because I feel very passionate about this. And I don't think there are enough people in the community. I think there are very few people in the community truly thinking about the long-term security of Bitcoin. I think maybe we have a feeling of false security. And if you talk to a security person, that's the death keel. In fact, there's a, do you ever watch the movie World War Z? No, it's a zombie movie with Brad Pitt. But in the movie, the reason I bring it up is, so it's a zombie movie, right? This virus thing has taken over the world and there's zombies everywhere except for in Israel. And Israel has basically built this wall around the country, especially around Jerusalem, and Jerusalem is safe from the zombies. And Brad Pitt ends up going into Jerusalem and he talks to the head there, the guy now running the show, and he said, how come while the whole rest of the world saw this problem, did not see this problem, you saw the problem? And he said, well, it's because of the 10th man. And in Israeli history, what happened was at the Munich Olympics, where the Israeli athletes were murdered, there were some threats. There were signs of the attack coming. And this is a true story, by the way. This part's true. And the message went into kind of the ruling body within the Jerusalem or the Israeli government. There were 10 guys, and they all agreed to ignore the threat. And so after that happened, though, they were obviously wrong. Okay, so there's this governance practice within the Israelis that as the 10 people sit around the security board, if the first 9 people all agree that the threat is not there, the 10th man, regardless of what he believes, must go against it. And he must present a case as the devil's advocate against it. So I feel like I'm the 10th man sometimes. That's a long way of saying that I think we need 10th man voices because, I'd say like anybody in security, whether that's cybersecurity or real security, it's when you feel complacent, when you feel secure that you're most exposed. And I think we in Bitcoin feel too secure. By the way, I believe we are impervious as long as we take proper care. But there are paths. They're not highly likely, but there are paths upon which we can be attacked. And they're not the likely attacks, by the way. They're not 51%. They're not government bans. At least I don't believe so. I think those are unlikely, and the game theory plays it out. But there is one, and you didn't ask about it, but I'll roll into it anyway. I wrote this article called Satoshi's Heel. So kind of with my 10th Mat hat on, after setting the table with the rabbits and the horses and the elephants, I said, hey, what if we fast forward to some time in the future, and now all of the hash power has been concentrated in a very finite number of sites. It's the path we're on, right? The path that we're on. So then I said, now, let's just imagine that 99% of the hash is there, and 1% is, we'll call it with the rabbits. And the rabbits and the horses have been priced out other than that. There's 1% hanging on because they're the pleb. I mean, they're doing it. They're losing money, but they're there, right? You know, God bless them, right? But the utility companies have taken over, and so some event happens. Government ban, nationalization, terrorist attacks, whatever. And 99% of the hash rate gets knocked out just as we're doing a difficulty adjustment. Not that I want to help any terrorist group out there, but if you're going to plan an attack, that's exactly when you do it. And I call that the night terror scenario. Okay, why? Because a lot of people would say, typically, well, don't worry, because as soon as we get to the difficulty adjustment, the system will rebalance itself. Well, what they might not understand is that it takes 2016 blocks to be processed until we get the difficulty adjustment. Well, if you knocked out the whole network right as we were about to do a difficulty adjustment, guess how long it takes to get to the difficulty adjustment? Just under 4 years. And in 4 years' time, we would process 2016 blocks, or typically about 400,000 transactions in 4 years. Is the network secure? Yep, still secure. It just doesn't work. You can't do anything on it. You can't, by the way, you can't close lightning channels. You can't open lightning channels. You can't get money off. You can't move money through exchange, from exchange to exchange. Like, it's complete paralyzation. Now, what are the odds of this? Tiny. But they're not zero. And it would be foolish of us to think that other people who wish us ill aren't going to think of these same things. And by the way, I struggled whether to publish this article or not. And I take other scenarios. So that's what I call the night terror scenario. There's a nightmare scenario, which is only 95%. Yeah. Excuse me?
Yeah, go through the nightmare scenario too, yeah.
Yeah, so the nightmare scenario basically says, okay, it's not 99. Instead it's, it starts to rebuild itself a lot more quickly, and we're able to, over the course of about 9 months, we rebuild about 7% of the original hash rate by horses and rabbits kind of dusting off machines and getting them in place. It still takes over 9 months to get to the difficulty adjustment. And then, by the way, there is a piece of code that does not allow a full difficulty adjustment to take place. We saw this in the with the China mining ban, where it will kind of modify itself. So I don't want to get too into numbers and things in this show, but let's just say, you have a night terror scenario, which is approaching 4 years. You have a nightmare scenario, which is like 9 months. And these are things that, well, they literally did keep me awake at night. You probably can tell if you ever read my article, and I crunched a lot of numbers to figure this stuff out. 100% avoidable, though. 100% avoidable. And by the way, if we can keep, I believe the safe level is about 30%. If we can keep about 30% of the hash rate in the hands of the horses and the rabbits, and we can keep about 30%, and we could, if we could get to about 30% of the power feeding the operations as wild, then we reach mathematically in an impervious level, and we can withstand any attack or any shutdown at that point.
Right. Yeah, I do. I mean, it's a fantastic piece. Satoshi's Heel is mining infrastructure vulnerability that could take down Bitcoin. I want to read a bit from it. In Greek mythology, Thetis dipped her infant son Achilles into the river Styx to give him the power of invulnerability. Achilles grew to become a seemingly invisible warrior, but he was felled when a poison arrow struck him in the heel. The very spot where had held him when she dipped him in the river. She'd missed just one tiny spot, but that was the downfall of Achilles. In modern times, the term Achilles heel has become synonymous with any powerful force that is taken down by an unforeseen or small weakness. And history is littered with mighty people and organizations that have fallen in just this way. For the past 13 years, Bitcoin has been a very powerful force that has fended off all attackers. This has given many of Bitcoin's advocates an air of confidence, but this might be ill-placed or even dangerous. The genius behind Bitcoin is clear, but this doesn't make it perfect or invulnerable. In the years, decades, and centuries ahead, unimaginable variables will emerge, and maybe one of Bitcoin's greatest strengths will be manipulated and exposed as a weakness to become Satoshi's heel. Yeah, I think, and I want to continue a bit here. I want to read some of these numbers. Imagine a time in the future when captive elephant sites dominate the mining network. This domination is so complete that 99% of the Bitcoin mining network's hash power is consolidated in several dozen captive elephant sites. In parallel, political and financial establishment forces across the globe have seen Bitcoin seriously erode their ability to implement their agendas. Knowing that the best way to attack Bitcoin is to shake the public's confidence in its stability and reliability, Bitcoin's detractors set a course of action to cripple the Bitcoin mining network. So just before the completion of a difficulty epoch, a consortium of nation states coordinates a hostile shutdown of all captive elephant sites. They do this by forcing utility providers to instantly cut power to all sites, and they deploy troops to prevent the removal of any equipment from the sites. The Bitcoin mining network would be reeling from this blow because it instantly will be 99 times more difficult to process blocks. Instead of taking 10 minutes to process the next block, the expected completion time would be 990 minutes or 16 and a half hours. This would drive the daily transaction capacity of the Bitcoin ecosystem from about 300,000 to just a few thousand. Worse yet, 2016 blocks must be processed before the next difficulty adjustment. And with the vastly reduced hash capability of the network, this would not occur for another 1,386 days or 3.8 years, assuming no new hash power is added. Additionally, new Bitcoin would be entering circulation at a snail's pace because money supply increases are completely dependent on the mining of blocks. Obviously, panic would ensue as many Bitcoin holders seeking to sell or get their Bitcoin into cold storage would be locked out. Off-chain movements on exchanges and transactions on layer 2 protocols like the Lightning Network would be possible for a while, but they would soon become constrained because base layer on-chain settlement would become virtually impossible. After a few days in the night terrorist scenario, the Bitcoin ecosystem would be so dramatically impaired that the world's confidence in it would be shaken to the core and irreparably damaged. It's striking. And, I really like your story about the 10th man because those are the situations when everyone's like, go left. I'm like, well, maybe we should go right. Let's at least debate it.
At least debate
the fact
right.
that you all feel so convinced about this, what might not we be seeing? And And you get into we talked about the nightmare scenario, and the numbers are just reduced a little bit, but you get into, a similar predicament. And you also get into this shape shifting form where they could be turning power on and off, and hash rate on and off. And that could be confusing and really, push the system to its limits. And all this deals with confidence, which, the system would be working as designed, but people's confidence in it would be maybe irreparably damaged.
Yeah, I think that's. I'm glad you brought up. We can go as deep as you'd like, but I think that the point you brought up there, which we didn't talk about before, was if I was a nation state and I did this, I turned off, as you said, we basically nationalized and seized the mining assets, right? Shut off the power. And you let Bitcoin struggle for whether it's 9 months or 4 years, and it finally gets the difficulty adjustment that it needs based on the new hash power. If I'm the government, I then instantly turn all the hash power back on. Now what happens? Now you go and you've made the difficulty adjustment down. Now hash rate is ripping and you're processing blocks at an amazing rate, right? And you're going to rip through this thing, these next couple thousand blocks in a matter of seconds, probably. And then you can just turn it off again and start the whole cycle over, so you can yo-yo this thing. Now, what would happen with Bitcoin? Well, the core devs would be getting together. They'd be talking about code changes. We'd be, but we'd be in a mess. We'd be in an absolute mess, trying to wiggle our way out of this. And maybe it would be, hey, we change off a SHA-256 or there's all kinds of things, but it would create absolute chaos. Would Bitcoin still work? Probably. But again, I go back to confidence. Is it going to be the global reserve asset when that happened? I don't think so. Or, and I think it gets relegated to a niche, and it's probably irreparably be harmed. And I believe we lose at that point.
And so to kind of build on this a little bit, you listed another example here. Atlas Power announced a $1.9 billion investment in North Dakota that will bring 750 megawatts of mining capacity online before the end of 2023. This means that to keep pace, horses and rabbits must add at least 322 megawatts of mining capacity just to keep up with this one site. To go further, this is where elephants really feast and everyone else is facing a famine. However, when facilities like this one from Atlas Power come online, they typically come online with state-of-the-art mining machines. I mean, this is after 12 to 18 months minimum. Right. But they come online with the state-of-the-art mining machines. They've gobbled all these up. They've increased the cost of these things. They've made it impossible for the miners and rabbits to get them. This means attached to this power will be 150 terahash per second or better. Rabbits and horses historically have issues getting access to and or affording this type of equipment, so they typically lag one generation behind. In this case, it means they would typically use 100 terahash second technology. Therefore, keeping pace would then require 50% more machines at 50% more power. Given this, it means rabbit and horse sites must add 161,000 new machines, consuming 483 megawatts in less than 2 years, just to keep pace with the exposure from a single site. And assuming that the Atlas Power site is utilizing grid-based power, then it also means wild energy sources equaling 483 megawatts must also come online. Any shortfall by the horses and rabbits pushes the vulnerability of the ecosystem closer to the danger zone. So this is where I ask, okay, we're talking about a huge amount of megawatts here and terahashes. And I mean, how do we put this in perspective? You could build a megawatt site in 9 weeks with a force to your soul to get it done.
Yeah.
But like, what kind of power are we talking about? Like, what kind of power do countries use?
Here's a great example. I was fortunate in a very small way. I'm not Max Kaiser or Stacy Herbert or anybody like that, but I did in the early days do a little bit of work and assistance with the Salvadoran government. This was back in 2022. And I visited El Salvador a couple times, worked with the government there. I sat down with the Secretary of Energy for the country of El Salvador. And I was inquiring about the ability to honestly put up some mining in El Salvador. And he pulled up on his computer. I was in his office. He pulled up his computer. He said, hey, well, he said, here's where we are right now. He said, as a country of 6.5 million people, we consume 900 megawatts of power. 900 megawatts of power. And, or they produce 900 megawatts. They consume 1 gigawatt. Okay. And they, until very recently, were buying 100 megawatts from surrounding countries, but they just had a changeover where they brought a natural gas plant online, and now they are self-sufficient. But so to give you an example, you were talking about, you know, rabbits and horses needing to put on 483 megawatts. Well, that's about enough power for a city or country of 3 million people. All the businesses, all the houses, all that sort of thing. So that'll give you some context of how much power that is.
Right. To go a little further to read from your piece, mining has variables that could in theory become centralized, including geography, jurisdiction, energy sources, site sizes, mining pools, chip sources, and system sources. It is crucial that a safe level of diversity always be in place across all variables. If the vector of any variable starts trending towards centralization, it must be stopped well beforehand. And I think this is where, when you were talking on the panel at Bitcoin Day Naples, it really struck a chord with me because, you know, everyone was like, oh, how would you build? And, you know, one person was like, oh, I would, you know, want 4 to 6, 10 to 15 megawatt facilities across 1 or 2 states or 3 states near each other, maybe across a river, so I could centralize resources and logistics and be a little decentralized. And someone else said, you know, I would love to run 3 100 megawatt sites. And, you know, and your answer was very, very different across just being spread across geography, all these variables. Right. So that not only is the ecosystem decentralized and anti-fragile, but the company is to follow the ethos of the base layer. And we talked a little bit about Texas and politics there. So what can we do to help horses and rabbits?
Well, the first thing is become a rabbit if you can, even at a very small level. Try to become a rabbit, and I think, you know, don't look at it financially. Look at it, if you're a Bitcoiner, look at it as kind of doing your part. By the way, you'll learn so much if you've never mined. You'll just learn a tremendous amount. Same with running a node, right? Run a node, but we're talking mining here. But run a miner, see how it works. You know, the elegance of this system is amazing. As I've peeled back the onion and dug deep into the mechanics of mining and the mining system, and it's fascinating, it's brilliant. And I think, you know, again, being part of it, because again, they can't hunt all the rabbits. It's impossible. And so should something happen, you know, be in a position where at least you could turn it on, maybe buy a machine. You can buy an S9 now for like $50. So, you know, go do one, set it up, run it for a few weeks. And if you don't want to continue, fine, but at least have it there ready to go to help if need be, right? Or an S17, which is a piece of shit, but sorry, I don't think it's here. But you know, there's you know, there's stuff, you know, get one of these older machines and learn. I think that's the single best thing to do. If you've got a little more financial resources, you want to be more involved, well, then, you know, invest in a private mining company, whether that's mine or somebody else's. Go reach out and invest in a horse. You know, I even have, like, one of my latest projects was called Pony Express, because it was a really small horse that we put up really fast, right? So go out and do that. And really interesting, if you can invest in a project or invest in somebody developing energy off grid, then that really, really is important. I've mentioned it a little bit publicly. I don't talk about it too much, but like, one of our investments is in a textile mill. We rehabilitated a textile mill that had its own hydroelectric infrastructure in South Carolina. It was a couple $1 million project, honestly. We threw into it, but we rebuilt the whole hydroelectric infrastructure from a textile mill that hadn't run in 20 years, and we mine off grid in the wild, off of that resource. Now I have on-grid resource. I have on-grid operations too, but if you find yourself able to invest in something like that, wonderful, you know, then you're supporting the ethos. I'm even talking in the morning, I'm talking to a guy from South Africa, doing a hydro operation off grid in places like that. And I think those are really cool things. I don't know whether anything will come of that, by the way. I talk to those kind of people all the time, but those are the sort of things that if you can finagle your way in, then you're really, really doing something to build the security and integrity of the ecosystem.
Right. I can see that for sure. Another thing, I think, can you, how many nines of reliability does Bitcoin need? And what are we getting at here?
Yeah, well, I alluded to that a little bit before, but if we want to be secure for 1,000 years, then we need to build with like 99.9999% reliability. So anybody that has a quality background may have heard this phrase of nines, you know, what levels of reliability defined in nines. And so 99.9999 means 6 nines. Okay. And if you're trying to build something for 1,000 years of reliability, that would be appropriate. I give an example, back to my laptop design days. In fact, I'll ask you a question, Cedric. Do you know the difference between a battery and a bomb?
I'm going to demur and say no.
Okay. The difference between a battery and the bomb is the ability to control the release of the energy. So a battery is a bomb. The only thing that separates it from a bomb is that we have the ability to control the rate at which the energy gets released. If it gets released instantly, it's a bomb. So why did I tell you that? Because I design laptops and they have batteries. And I'm sure all of you have heard a story about a laptop or a cell phone or some battery operated device that blew up. And so you experience the difference between the battery and a bomb, where the battery became a bomb because something happened. Now, that can happen because something external damaged the battery. You know, somebody put a screwdriver into the battery and, you know, it created some sort of a chain reaction and overrode some of the safety measures, and boom, it explodes. Or it could be a design flaw somewhere or manufacturing flaw somewhere in the battery. So if, as I mentioned, you know, we were selling, when I was at Gateway, we would sell laptops. Oh, we would sell, let's say at our peak, 2 to 2.5 million laptops a year. Okay. We sell more than one battery per laptop. So we're probably selling 3 to 3.5 million batteries. So when we design that battery, we have to design both the charging circuitry and the discharge circuitry, you know, the thing that controls that release, such that it's 99.9999% reliable. Because if I said, Cedric, I designed this battery and it's 99.9% reliable, your instinct might be, well, that sounds pretty good, Bob. but apply it to 3 million and it's pretty shitty. Somebody's probably going to die. Not to be dramatic, but probably that's going to happen, right? Something bad's really going to happen. So with Bitcoin, I think we live in a world where people think in 2 nines and 3 nines, 99%, 99.9%. And it goes back to what we talked about in the article. There's this false sense of security that comes from that number. It's not a very good number when you're trying to do what we're doing. Certainly in terms of like transaction integrity, we expect 100%, right? And in things like availability of the network, we need 99.99999. And we need in control of the network, we need 99.99999. We can't get to 100, but that's what we need. And that's why that number is important.
Right. That's very interesting. Why is it important for Bitcoiners to stop using the term ASIC to describe a mining server?
Oh, this is a good one. Okay. The term ASIC stands for application specific integrated circuit. Okay. It's a chip. That expression was not a Bitcoin expression. By the way, we designed ASICs to do battery control circuitry back 30 years ago. So if you just listen to the expression application specific integrated circuit, it's a chip designed to do one thing really well. That could be to control the charging circuitry of a battery, but it could also be to run the SHA-256 algorithm. Okay, so when we first, there's many reasons. I'm going to give you a lesser reason and then the more important reason. The lesser reason is that as we try to broaden the footprint of Bitcoin, we confuse people by misusing these phrases. So the technical community outside of Bitcoin, when you say ASIC, it's not a system. It's not a machine. It's a chip. So you're just causing undue confusion to people when you use that. Now, here's the more important reason, though. Bitcoin is going to be attacked. It is being attacked. Proof of work is being attacked. And even right now, I'm sure most of you, we're doing this, I think on March 28th, we're talking of 2023. The previous week, the Biden administration announced an intent to create a 30% ban, 30% tax on Bitcoin mining usage. Now, when I describe a Bitcoin mining machine, my typical phrase is I call it a mining server. And the reason I call it a mining server is that I want the world to look at it for what it is, which it is. It's just a computer running a certain set of software and an algorithm. And it is very important that the world look at Bitcoin mining equipment, Bitcoin mining servers as no different than a mail server, a web server, a database server, a QuickBooks server. They're the same thing. And what we're doing by using the term ASIC and separating our equipment from the general purpose equipment is we're giving legislators an avenue upon which to attack. So it's very important that we call it a server, because if we do, and we can we can get wide agreement in all circles that that's the case, then it's almost impossible to legislate this. You know, that you and I are both doing this on a personal computer. In reality, there's no difference between the computers you and I are having this podcast on and a Bitcoin mining server. The only real difference is the software that we're running, that we're choosing to run. And I know that these attacks are coming because we're already seeing them. And I think that it's very lazy for people to do this. And I know they don't mean well, or they don't mean ill by it, but it's a bad habit. So to the degree I have the power, or, shows like your show, we can broadcast this. I really highly encourage you to kind of correct yourself. Start calling your S19 a mining server. Start calling your M50 a mining server. And if somebody else says ASIC, say, hey, that's a mining server. Don't give them fertile ground upon which to plant a seed.
Right. On a lighter note, in college, my best friend, probably one of the smartest people I ever met, but he turned to us all, one afternoon, he's like, stop calling it a PIN number. It's a PIN, a personal identification number, and don't call it an ATM machine. It's an automated teller machine.
Yeah.
Ready. And, and those are simple things, but you're just being wrong. You're just not right. You're not being accurate. And you're not thinking through what you're saying. And it has implications. And yes. I see where you're getting at there. Does this dovetail into why we must expand on the importance of Bitcoin mining politically beyond the grid green energy usage angle? Is this like sort of equating like, hey, because, we get into this conversation about like how much energy Bitcoin uses and whether it's sort of got good energy or bad energy. And like no one has that conversation about YouTube, Netflix, the ATMs that we use and the computers running all these things and the banks. And
right.
Is that kind of dovetail into this?
Yeah, there's certainly a relationship. So those of you who are in the Bitcoin Twitter world, I'm sure are very familiar with a lot of the voices, who, by the way, I like and respect tremendously, who are out fighting some of these attacks and on Bitcoin, whether that's the Greenpeace attack or whether that's legislative initiatives at the state level. But I'm on the board of advisors of Satoshi Action Committee. I support what Dennis Porter is doing with that group very strongly. There are people from the Bitcoin Policy Institute doing great work. Tony Cross and some of the folks there doing great work. The only thing I will say is they're very focused on things like, hey, they're trying to rally legislators and rally against maybe some of the environmental activist groups and saying, well, no, you got Bitcoin all wrong. We're stabilizing the grid. We're driving green energy. We're doing those sort of things. Okay. I agree and support that. However, I believe that those are very macro kind of views. I don't think they resonate with individuals at all. If you're some guy listening to this podcast in Birmingham, Alabama right now, your power's never gone off. You probably pay a small amount for your power grid. You're probably not that worried about global warming. It doesn't resonate with you. Here's what should resonate with you. In your house, in your business, you have outlets all over your house. Right now, there is an attack vector being executed to try to look on the other side, inside your house, and see what are you plugging into that outlet? And somebody, the Biden administration leading the way, is making a moral judgment about what you're doing with the energy on that outlet. And you may not even give a crap about Bitcoin, but you damn well better give a crap about the fact that somebody is trying to decide that the computer running the software, just talked about this, right? A specific type of computer running a specific type of software is morally reprehensible. And if we allow, whether it's at the federal level or the state level, legislation to dictate what you can plug into that wall, you lost. You've lost freedom at an epic level because we've crossed the line. Can you plug in a hairdryer? Can you plug in a microwave? Maybe you can't use the microwave between 12 and 6. Our rice cookers okay, but crock pots aren't. That's what's coming. And so to me, I had an opportunity to spend some time with Senator Cruz. And this was the message I gave to Senator Cruz, because he's hearing all this stuff from Texas, from the people, great guys. They're trying to build grid stability and they're trying to drive green energy and they're trying to do all this wonderful stuff. But I said, hey, to me, all that's irrelevant if I don't control the outlets in my house. And there's no greater attack on personal freedom than telling me how I can consume my energy. Well, maybe there would be, which is if you tell me how I can spend my money. But this would probably be the next.
They're coming together.
Yeah.
I'm having David Zell was recently on the show from the Bitcoin Policy Institute. He's a really interesting guy. So then I would love to hear from you. What could we sort of glean from the maturation of the PC industry that can teach us about Bitcoin? Because we've been kind of touching upon it a little bit all night, but.
Well, I think a couple things. I think there's a tendency for people when they analyze Bitcoin to look at the internet maturity. So let's look at internet adoption. I'm sure you've seen that. Well, I think it's important to remember that the internet adoption curve actually was built off of the personal computer adoption curve. That without the personal computer, there is no internet adoption curve. And I think that the personal computer was a fight for integrity at the base layer. The base layer was the hardware. This might sound funny for those of you who are a little younger, but what is an IBM compatible machine? We had to have integrity, that I could put the same piece of software on my gateway that I put on the Dell and it would work in the same way. It's kind of like the nodes to a certain degree. If you don't have that, you have nothing. And if you study the history of the personal computer more than we can probably get in at this point in this conversation, but what you find is there were those battles. There were attempts to hard fork it, by the way. Something called Microchannel, which came out in 87 or 88, which was an attempt by IBM to hard fork the personal computer architecture away from the very one that they had started. It's not unlike the block size wars and the attempts by Bitmain and some of the other big players to try to force it. And you know what? The plebs won. The plebs said no. They beat it down. I think the power of the individual, especially a collective, like-minded group of individuals, was proven there. And of course, it's been proven again with Bitcoin, but the precursor to it happened at that point. What you'll also find, if you study the history of the personal computer, is something we referred to before, is that your skin is going to melt over what's going to happen in just the next 3 to 5 years. The people and the companies that come and go, that go up in flames, that the companies that will come out of nowhere to do things that change the world, at the same time that others that you thought were going to change the world go up in flames. I mean, there are story after story after story of those sort of things that I think are maybe a little better illustrated than even the internet. So I don't in as succinct a way as possible. I think I'll that's probably the best I can do with that.
Yeah, no, that's great, and it's just fascinating. I do think that we draw a lot of parallels, but we do kind of overstep, I think, computing as sort of the underlying structure to the internet, and all these things are exponential technologies built on top of each other, which just increases, I think, sort of the rate of adoption and the curve, I think. I'm really curious then, do you have any guesses on who Satoshi might be?
I can only guess, and I think Nick Szabo is a guess. The most interesting, so that's my B choice. My A choice is kind of one that's come up recently, which is John Nash. And I just read about that recently, and his death coincided with the disappearance. He had the mind to pull this off. He's a Nobel Prize winner in economics and one of the greatest mathematics minds of our time. He was, a little eccentric and autistic, and got the British angle. So I find that very compelling.
Sure, and probably had the life experience to put all these things together, and passed away after it was launched, and would explain, sort of the protection of anonymity and the keys never moving, lost, coins never moving, the altruistic sort of nature of it, coming into it with money. Yeah, I mean, it's very interesting. I think, in your background, I can't cover it all, but I'd love to hear one day about, Steve Jobs, Michael Dell, Bill Gates, Ted Waite.
Stories.
Yeah. To round it out a bit, what does the world look like if Bitcoin doesn't win?
I wake up each day driven to do what I can to create a world that I believe, that I hope my kids and my grandkids. I have 4 kids, 2 stepkids, and 5 grandkids. So for me, I can personalize very much. I hate to say it, but I am somewhat pessimistic. I don't think it's some complete dystopian nightmare. I think there are enough good people in the world. There will be enough safe places in the world for people to go that will find pockets of freedom. But I believe that's what the world will come to, that the 8 billion or so people living on the earth, much like today, will largely live in oppression with massive levels of control on their freedom to move, their freedom to express themselves. And that there'll be only a few shining spots in the world where they can go. I'll share with you one of my daughters and her fiance just in the last couple of days have asked me about El Salvador, and they are seriously looking at possibility of moving to El Salvador. And I've had to tell them that, I mean, they have to follow their own guide, but I wouldn't stand in their way right now. I think that there are enough things that scare me about what's happening in this country and enough positive things there that if that's where their heart takes them, then I think they should go. And so, yeah, if Bitcoin doesn't win, it's I think really bad. But there is a middle ground where Bitcoin wins enough. Like we don't necessarily, so part of it is how do you define win? I think Bitcoin existing in a material way where it's available, even in and of itself, puts enough pressure and keeps the current system honest enough that there will be a marked change in the world. If it loses, meaning it's corrupted or fails in some way, then I think, I mean, literally you're going to be fighting to go to a few places in the world, and this may not be one of them, by the way.
Yeah. If you could orange pill anyone in the world, who would it be?
Oh, there's a question. Wow. I'm trying to think of the person that I think has the most respected voice. You know, what comes to mind is somebody like Warren Buffett, where I believe, you know, maybe he or a Jamie Dimon, somebody like that, which, you know, I perceive these as people on the very dark side. And if you know, you think about it in a religious context, if they were to be saved and came out and repented and truly extolled the virtues of Bitcoin, I think the effect would be dramatic. So I think it would be somebody like that.
Yeah, I could see that. Yeah, I toss with it because I like I don't like the top down approach. You know that. So I think of if we could orange pill somebody very big, they would help other people get it, but that's very top down to me in some ways. But my answer for that would be maybe Michael Jordan, because he's sort of like Teflon, and people don't sort of like kind of a lot of, so maybe he would be someone who would break through, like in the way Warren Buffett would break through in the financial sector. Maybe Michael Jordan would break through in the non-financial sector culturally to people. I'd be remiss if I didn't ask you about, you know, people talking about Bitcoin hitting the hash rate hitting an all-time high. I'd be remiss if I didn't ask you about that. So do you have some thoughts about that?
Yeah. So a couple things. First, when you see hash rate numbers, always ask what's being measured. So the nature of, most of the numbers that get published are very short looks, meaning they've looked at the last handful of blocks, last 10 blocks, let's say. And then they've said, well, the network, if it's properly balanced, will do this in 10 minutes. And therefore it took 9 minutes. And therefore, based on a certain difficulty, there must be this much hash rate. Okay. And it's not statistically valid. It's essentially like me saying I flipped this nickel 10 times and I got 7 heads and 3 tails, and therefore the odds of getting heads are 70%. It's kind of like that. It's false. You have to look over an extended statistically valid period. There are some places like Brains, for instance, they have a dashboard called Insights, and you can get a 30-day look. So a lot of the short-term ones have been reporting numbers up around 400. If you look at the 30-day window, it's like 3.25 or 330. Still, by the way, very, very high. It's been ripping. That said, if we go way back, I have a personal mathematical model that I've built and maintained for several years now. My model pre the China ban would have forecasted for this same time period almost exactly this number. So in other words, we're actually on, if you look at the long-term zoom, we're kind of just on the same path that I think we were on. Now, we've been adding hash at a huge rate, especially since the first of the year. The price recovery, if you want to call that, the rebound from 16 to 28, definitely has helped the mining community survive. But I think primarily what we're seeing is all those capital projects. Now, if you remember, I told you big projects, they take 12 to 18 months to come online. So if we back up 12 to 18 months, where are we? Well, we're in the middle of the bull, right? We're in the middle of the time period when all of these big capital projects were being allocated. I think, I don't know for certain, but I think we're at the point where a lot of that hash rate has already come online. And I think we're going to see a slowing. I can tell you that the pricing of the mining servers, not the ASICs, the mining servers, has not moved as the price went from 16 to 28. That's very telling. That means that new equipment isn't being suddenly sold out with that price move. It's still very available. I could, if you said, hey, Bob, I want to buy a mining machine, can you get one for me? I can get it for you in like 2 or 3 days, almost any one you want, and I get you a great price. That's not a sales pitch. I'm just trying to tell the state of the world. Go back to that miner's trilemma. We are still at a point where new capital is not being allocated. So again, given that we're, we maybe have another 3 months where capital projects committed in the bull are still going to come online, but then we haven't seen new capital come in, and we're just under 13 months away or so from the halving. So a lot of people are scared of that, investing into it, saying, well, what's going to happen on the other side of the halving? And, again, so I think what we're going to see is we're going to see a number plateau here soon, probably in the mid 300s, and we probably won't see much movement of it until after the halving.
Yeah, that's interesting because, my reptilian brain, my PIN number, my ATM machine brain is like, oh, maybe this is a country coming online, but, it's good to hear realistic explanations of what's going on and how this is not, an exact science, but, an extrapolation. I can't ask all the questions, Bob. This has been so much fun. I want to ask all the questions, but I'm just going to run through these. I won't even ask them, but I would have loved to have talked a little bit about how El Salvador is like Taiwan in the 90s, and your experience in El Salvador, specifically around like the Sacagawea dollar. I thought that was interesting, and we could have talked about how Barefoot Mining pays investors daily in Bitcoin. Versus public mining companies who pay in fiat or, or don't pay dividends, and you're just looking at price appreciation. And I would ask you about how do you compare buying Bitcoin to mining Bitcoin, and, how do you value these projects versus just hodling Bitcoin? And what I think was what hit me at Bitcoin Day Naples was, I do think Florida is the best state to be a Bitcoiner. I think it's got, sunshine and freedom and just fantastic proximity to the United States of America. So, that's great. And I might have stole that joke from Novogratz, but, and it was interesting. You mentioned in the beginning of the show, you started a beer company, and I don't know what happened with that, but that was probably incredible or impeccable timing. I wanted to start a beer company in around 2002 or 2003 with my buddy, but we didn't know how to make beer. We just knew how to drink it. I consider myself a beer snob, but part of my Bitcoin journey was I found Bitcoin. I got into Bitcoin, and then during that bear market that hit in 2018, 2019, I had a hard time justifying, buying Bitcoin with fiat. It was going down in price. I'm building conviction. I don't have full conviction yet, but and it was hard to keep throwing, what felt like good money after bad money. When it's going down in price. But I was collecting hard to find and hard to acquire rare and scarce beers, and they were drastically increasing in value while I was learning about Bitcoin and scarcity and security and storage and entropy and leakage and all these things that you learn about what you want out of hard money. And I was like, this beer is probably now worth more than I would want to spend to acquire to drink it. And I started selling the beer, and I was even able to sell it to some people for Bitcoin or even crypto, or just convert it. Things like that.
This is one of the rarest bottles, I think, in the world. I think maybe 3 or 4 exist.
Yeah. And so,
honey ale. This is my,
depending on how much you paid to acquire and how much you want to drink it and what your experience would be, and then how much, what if it breaks and you don't even get to drink it, or, what if you got to move and you got to move all this stuff? And I started thinking deeply about collectibles and scarcity. So, one day I'd love to chat about that. And I'll read out, before we roll out, I'll read out a little bit from your homepage on Barefoot Mining's website. So, wild mining for Bitcoin. Our passion comes from developing stranded energy sources and mining on site. We call this wild mining. This is because it means that these mining operations are not captive or dependent on a third-party energy provider and are less likely to be subject to regulatory changes or taxes. Additionally, these stranded energy sources typically have no viable means to reach consumers, and our mining operations put all this energy to practical use. It's great stuff, Bob. I've enjoyed this conversation immensely. I'll leave it to you for any parting words and to let people know where they could find you and Barefoot Mining.
Well, thank you. Well, to find Barefoot Mining, it's very simple. www.barefootmining.com, and you can reach out to me or any member of my team through that website. We do have our own show as well called Mind Your Business. So we've had several guests there. And there's a learn section. So if you're interested in diving deeper on some of these, all the articles are listed in that page too. I guess my parting words will be, whatever you do in this Bitcoin community, whatever role you choose to take, I believe that doing it with the ethos in mind is imperative. So we talked a lot about this as it pertains to the mining companies, but whether you're a pleb and you stack Bitcoin, or you're trying to do a startup, you're working on something on layer 2 or layer 3, I would just strongly encourage you to wake up every day and look at what you're doing and say, am I approaching this from the greater good? Because what I can tell you is that as an old guy that's been through a whole lot, that if your motivation for whatever you're doing is strictly monetary, it's hollow. And you have a unique opportunity to be part of something that gives true purpose in life. And as you get older, you're going to find that that beats the shit out of what kind of car you drive or what house you live in or how much money you have. So make sure that what you do fulfills that. Because when you start getting old and you start reflecting on your life, you know, your family and the people you love, plus your purpose in life, that's all that matters. So, and Bitcoin is a chance to be part of something that will have more of a lasting impact on the world than anything else you could possibly be involved in.
Yeah, I can see that. You know, I once spoke to my rabbi. He kind of described it as, you know, a lot of people spend their 20s and 30s partying or chasing fun. In their 40s and 50s, you know, really sort of making up for lost ground, you know, and trying to make money. And then their 50s and 60s, maybe they turn to legacy and thinking about their impact on the world. And one of the lessons learned from there is hopefully, you know, in your 20s and 30s, maybe you spend time building something meaningful and beneficial to yourself. And if you do that, you could probably spend the rest of your life partying and chasing fun. You know, but you might also get to your legacy a little bit sooner, you know, and I think that's what we all kind of yearn for, maybe chase at the end. But
well, here's what I can say. I'm with you almost all the way. Here's what I learned, because I think I mentioned I tried to retire at 35. My advice to all of you is never retire. Seek financial independence. Hopefully you achieve it. But wake up every day with a purpose in life. And I know we're talking very philosophical here, but you have to serve a greater good. And sure, if you have financial independence and you want to golf for the next 3 days, fine. But you know, do something. If it's helping at a soup kitchen or building a layer 2 Bitcoin app, it doesn't matter. But, you know, life without purpose is a life, in my mind, that's over. And so I will never retire. You know, I'm doing this Bitcoin thing. I'm pretty sure I'll be at it as long as I'm physically and mentally capable. And, you know, I think that I mentioned some of my friends. I think whether it's Larry Lepard or Greg Foss or myself, or you look at a guy like Max Kaiser, all people that I know, Jeff Booth, you know, probably none of us have to do this, but we all do it. And we're all working pretty much as hard as we ever worked, because the importance of what we're doing, it's a 1,000-year impact thing. Like, you know, I was part of the personal computer revolution. I never imagined that I would have an opportunity like that again to do something that really changed the world, but I was wrong. So here I am, and here all of us are. So it doesn't matter what you do. If you do a show like yours, great. You're educating and spreading the word. If you're a developer, you're writing code, great. If you're a miner, great. If you're a finance guy and you want to help finance deals, wonderful. But do something. Make it better. Don't just make it about you.
Yeah, live a meaningful life. This has been incredibly fulfilling, Bob. Thank you so much.
Thank you, Cedric. Great to be here.
Yo, thank you for listening. Please make sure that you're subscribed to the Bitcoin Matrix podcast so you don't miss out on any fresh and new content. I want to thank Bob Burnett for coming on the show. I also want to thank our sponsors, River, CoinKite, and the Bitcoin Conference for powering the show. Keep learning, keep stacking, stay humble, and stay laser focused out there. This is Cedric. Peace.